Problem 17-3 is on 709. It says the following transactions of Rumbaugh State College occurred during the 2005-2006 fiscal year. And you're asked to prepare the journal entries for these transactions. You have 3 of them. Cash was received as follows for the purposes noted. Endowments, private gifts, federal grants, state grant. Okay? So you have cash of $415,000, and it's just where do you slot it, right? And has it been earned or not? Okay? The unearned pieces are for the grants. Your chapter talks about grants, and grants are generally not earned until you spend the money for them. Okay? So when they initially come in, they're going to come in as an unearned revenue or a liability. Right? Okay? Then once you spend the money, we call it fronting, once you front the money, then you can release, you can earn that, you've earned that revenue. Right? Does that make sense? Yes, sir.
This is just kind of a random question.
Yeah.
How, is there like a normal process for how you would get the money to spend it? You know, like if you didn't have the money to spend it, but you were going to be reimbursed, is that a common thing, or usually?
How do you,
kind of like when the government would do like refunding bonds or something.
Right.
Like they pay off.
Yeah.
With other debt. Like would they issue bonds or something to?
No.
Debt?
There might be an issue of debt. So, so for instance, if you're an institution who doesn't have the cash flow to front the money by yourself, you might get a line of credit with a bank, right? So that you could draw on that line of credit to front the money, and then the government reimburses you and you pay the line of credit back. Does that make sense?
Yeah, and I'm just curious, could you be reimbursed for the interest on that?
Generally not.
Okay.
Generally not. Generally the way that it works is you have to cash flow the grant. And you have to figure out how to cash flow.
Your responsibility, basically.
Yeah. Now, depending on how the program is set up, depending on how the federal program is set up, there are sometimes caveats that say you can draw the money, like for instance, the same day that you in essence spend it, right? And there are also, I don't want to say loopholes. There are also administrative processes in which spending the money just means recording it on the ledger, and you haven't actually spent the cash yet. Does that make sense? So, for instance, for a scholarship program, so
you could like award the scholarship but not pay it out?
That's correct. Because you're never technically going to pay it out. Not in hard dollars, right? Right. Somebody enrolls in school and their tuition bill is a $10,000 tuition bill. You give them a scholarship for $5,000. All you've really done is reduced, right, their accounts receivable. That's what we were doing on the first piece, right? With those scholarships, we were just reducing accounts receivable. So no cash technically changes hands, right? The reimbursement from the government comes in, and you book that as revenue. That's revenue. Okay. Number 2.
Can I ask a question about
Yeah,
that?
sure.
So the cash part, when I was trying to follow these journal entries, I specified the cash part for endowments and the cash part for restricted. How come it's not like that? Like you just have cash at $415. So how come you don't have to break it down?
Yeah, you can. In reality, cash doesn't get broken down. All the cash gets commingled. Okay. So for us, we have one main general bank account. We have accounts that help us know, if there's cash that's maybe attributable to the endowment or whatever, but we don't have. They're not separate bank accounts, and we treat it. Everything runs through our general account. So until an investment is purchased, it just stays in our general cash account. What we have those due. Remember those due to, due from accounts that we dealt with the government stuff, we have those. Those help us to know what's due, what of that general cash is due to the endowment fund or due to the temporarily restricted fund or something like that. If in this, if you want to break them out by endowment or whatever, that's fine. That's fine. In practice, though, it's all shoved together. Right? Is that?
No, I was just curious because of the way it did it in the book, and
Yeah.
so.
Yeah, and again, there's some limitations of what the book's doing because they're using naming conventions as opposed to numbers.
Right.
And the numbers, you would have different breakouts for different funds and things like that. Okay. Number 2, you have a list of expenses. So I've just recorded those expenses here. Okay. And again, in the functional areas, right? I mentioned institutional support. If the institution is a research institution, they might have a research component, instruction, student services, auxiliary enterprise. Okay? And I have now earned those grants, right? For the areas that the grants were given to me. So if you look back on number 1, federal grant instruction. It's a reimbursement grant. That means I spend the money and then I get to recognize the revenue. So I was given a grant for $150,000. In number 2, I spent $125,000 on instruction. So I can realize now $125,000 of that $150,000 federal grant. Does that make sense? Same thing with the state grant for student services. I spent, in this case, the total amount of the grant, so I can recognize the total amount of the grant. So that's all this is. It's just recognizing that revenue. Okay?
Is that
Question? Oh, I thought somebody said something. Okay? Number 3, pretty straightforward. You made an investment for $100,000.